What's going on, everybody? Foxhound Finance back again with another AMC update. Please understand that I'm not a financial advisor. Nothing in these videos is financial advice. All right, guys, it has been about 3 weeks since I last updated you on AMC, and obviously a lot has happened since that point. So today we're going to be giving a massive update. It's probably going to be a much longer video than usual. I'm going to cover the fundamental aspects here with this PowerPoint that I have generated for you guys with all the talking points and the main things that we need to cover on that side. And then, as per usual, we are going to jump into the technical analysis and the charting. All right. So you're going to want to stick around because this is going to be the most probably key details that you need to see for August and going into Q3 earnings. Okay. So let's jump right into the video, guys, starting off with our core message here, which is AMC is no longer a meme stock. Okay. This is now a full turnaround story, which is what exactly we all saw it as from the very beginning. We knew that when COVID ended and all the bullshit, writer strikes and all these things that were getting in the way ended, that the box office was going to recover, right? That the movie slate was going to get back on track, right? Movies were going to start being reproduced at a much faster rate again. We knew that stuff was all going to happen at some point or another. It just took us freaking 5 years to do it, right? So during that earnings report, guys, in the last couple of weeks, what happened? We had earnings beat, we had a credit upgrade. We're starting to get the analysts lifting their price targets, and this is all lining up with the technicals, especially on the charts from what I'm seeing. All right, let's move forward. So, per the AMC earnings report, what mattered, what really stood out to me, first thing is $1.6 billion in Q2 revenue. It's a record quarter. We had $321 million in adjusted EBITDA. That's another record high. You had $190 million in free cash flow for Q2. 71 million in the attendance, up 13.5% year over year. And you had a 14-cent positive EPS, guys. I did not expect 14 cents. I'm going to be honest. I knew we would be positive, but that is huge. That is such a massive jump from what we just had last quarter. That's ridiculous. If we can keep doing that the rest of the year, which I strongly think we will, that is going to be. You thought Avengers Endgame, or it's going to be Avengers Doomsday for the Bears for sure, if it's not already. All right, let me just put it that way. All right, and it's fitting that Doomsday is at the end of the year for them. So it's just crazy. I did not expect a 14-cent positive EPS. I was thinking maybe 3 cents. All right, so revenue, attendance, the food and beverages is up, guys. We're showing strong operational leverage again. It's looking like a real healthy company from that Q2 report. All right, let's go forward again. The credit rating upgrade. Why does this matter? S&P Global upgraded AMC to a B minus from a triple C plus with a stable outlook. Does that sound like a meme stock to you? Does that sound like a super speculative stock, super high risk stock to you? Because it doesn't to me. And this has been an ongoing thing where the credit rating has just been continuing to get boosted. This is the same thing. I don't want to spoil it until next slide, but I've seen this with similar companies or other companies in a similar position. And the outcome is a super bullish rally. Okay. So a credit upgrade signals lower near-term default risk and improved financial flexibility. Debt reduction and stronger EBITDA triggered lower interest rates on about 75% of AMC's debt. That is huge. That means we're saving annually on the interest $51 million, guys. That's about $12 million a quarter. For some people, they don't think that's a big deal. But if that $12 million in the quarter is the difference between AMC being positive in earnings or being negative, that's huge, because we don't want any more narratives out there about negative earnings report or this was just a fluke quarter. So that $12 million a quarter, it does mean something. That $51 million on the yearly could be the difference between AMC having a total loss on the year or being positive. But the narrative around it matters. That's the key takeaway, is if they can't say AMC was negative and it was losing money, that is ammunition they do not have. And by they, I mean the Bears. So let's move to the next slide. Here's the analyst price targets so far that we got for the upgrades. A lot of people are going to be feeling like negative about this, but I'm going to explain something here in a second. But Wedbush is going from $3 to $4, Benchmark $2.50 to $3. You have B Riley going from $2.25 to $2.50, and then Citi going from $1.20 to $1.80. At minimum, guys, These new price targets should tell you kind of what the floor is if we're going to have some kind of pullback, which is great. That means AMC is not going to a new all-time low. So floor definitely gives us some kind of direction there, but also I think you're going to continue seeing these price targets moving every quarter, right? Especially if we're getting positive earnings, you're going to continue to see these price targets evolve. And that's going to bring me to the next slide here. So the AMC versus Carvana situation, the turnaround comparison. Everyone here probably at this point has heard me talk about Carvana, even outside the fundamentals, even technically speaking, looking at the chart, structure wise, it was nearly the kind of same pattern that we're seeing now in the beginning when it was turning around. It was waving up and down, right around the earnings reports. So biggest takeaway here is Carvana was once treated like a bankruptcy story, and then the market re-rated it after restructuring and execution improved. So when the operations improved, right, they cleared their debt, pushed their debt out, refinanced, they did all that stuff. What did you guys see for Carvana? Go look at the chart. Back when, I mean, now they have it split adjusted, but Carvana was sitting at $3.50, guys. It fell like 98%. And when they restructured the debt and started turning it around every quarter, especially when they were announcing positive quarters, it just exploded. We were seeing 100% rips every quarter report. All right. And I'm starting to get similar vibes for AMC right now. It's doing the exact same thing. As we just had our first positive earnings, if we go into Q3 and other positive earnings, I will not be surprised, guys, if you start seeing squeeze type moves on those quarters. And I'm saying squeeze, I'm saying 100%, 150% rips, where you're seeing the stock double essentially every single quarter, because that's what Carvana was doing. Like nobody's business. Every quarter, it was just ripping. And I started saying, when is this going to end? Because this is crazy to me. I mean, and then it goes from $3.50 to $500 almost. And then they just did a forward split or whatever and chopped the stock all up. But again, on that chart, showing extremely similar signs. So again, AMC was highly indebted, coming off of COVID. They said it was all over. There was a lot of doom and gloom. They pushed it down 99%. But now operations have improved for AMC. They refinanced their debt, pushed it out to like 2031. All the high interest payments, guys, are no longer hitting us. Everything has been taken care of. So now the perception is changing in the market. The narrative is now changing. And again, when the market perception changes, it can change fast, right? Especially when you're spitting out positive earnings reports, you're going to start to see everybody, including the algos, starting to turn on and the stock getting bought up because you're on a huge discount. You're seeing a stock now still down 98%, 97%, something crazy like that. So that's going to start turning some heads, and you're going to see a lot of the news change. Already I'm seeing AMC could go from $2 to $20. All these articles are starting to come out now. And I've been telling you, where's that first gap fill on my chart? We're going to go over it today again, but it was at $18 to $20. That was the first gap fill that we had to break. Once we broke the 1390 ceiling, I said, guys, $20. And sure enough, now here comes the articles. Where the fuck did they get $20 from? Just saying. Probably got it from Foxhound. All right, so why August could be huge for the market. If you looked at the SPY lately, it's been kind of trickling down, mostly this past 30 days or flat. And so from like an RSI standpoint, I could see, that being the cool down phase for one. But now we have also all of these events taking place in August. You have JOLTS, the labor market temperature check. You have the jobs report on August 7th, which can shift the Fed cut expectations for better or worse, right? They could say we're actually going to increase rates, and that would be horrible. But obviously, a rate cut could be on the table, or we just hold steady. So that could definitely shift things around a little bit. You have the CPI data coming on August 12th. You have the PPI data coming the day after. And then Jackson Hole Summit is on the 27th, starting to the 29th. So a lot of key things in there that the market could respond to. Just wanted to throw this out there. I do think we are due for a push up to a new all-time high for the SPY in August. That's just my opinion from what I was seeing looking at the SPY chart. So why the hell does this matter? Well, because if AMC starts to go into October, right, with positive momentum with the box office, and we're already getting the macro market push, right, to get us to this next target, which I think is going to be around $3.90 to $4, right? That sets us up for a cooling off period for September and then another rip for October. I kind of said that shit a little bit out of order, but what I'm saying is, you know, the market is going to start waving in and out too, I think, in conjunction with AMC's movement. So it's all going to be lined up. So Q3 expectations and projections. We had 2025 Q3 at $1.3 billion. We had the adjusted EBITDA at $122 million. We just had like $300 million plus for EBITDA. Okay, so compared to Q3 2025, if we blow that out of park, even if we double that, it's huge. We already broke Q3 2025 then. So the goal is going to be, can Q2 strength continue into Q3? And I think when you get 2 back-to-back quarters that are positive, things are going to get crazy. Somebody be watching for the box office. Currently, we're sitting at close to $1 billion already for July alone. Spider-Man just came out at the end of the month. So I will not be surprised for us to hit another $1 billion for the month of August. And then if we can close it out, which I counted like 15 like banger movies. All right, 15 absolute banger movies for Q3, which is insane. So getting $1 billion, I think, is going to be no sweat for the entire Q3 per quarter, or per month, I should say, of the quarter. You know, we had $986 million for July, but now that Spider-Man's out, I think that's going to just dominate all of August. I would not be surprised because, again, that's going to be leading into the next, Avengers movie. So it's going to blow up. I know that movie's going to blow up, but there's tons of movies coming out, guys, tons of content that's going to really push the Q3 box office. All right. I won't even be surprised if it goes to 3 billion plus for Q3. All right. So the bull case is that Q3 2026 should improve meaningfully over Q3 2025 without a doubt if the movie slate stays strong, right? We don't have any crazy busts, right? Like we'd have to have Spider-Man like fucking tank for it to go really south on us, right? That and some of the other second and third place projected movies that had to go really bad. But Odyssey went crazy. The Odyssey actually did really well despite all the negative criticism of the movie and the casting and all that stuff. So, I mean, I cannot see why we would have a worse quarter overall. All right. So, like I said, we're already on pace for nearly $3 billion. Again, looking at the macro market push in August, bear case would be obviously the box office momentum starts fading. Maybe there's debt dilution concerns for some whatever reason, which I do not understand why on this earth that would be the case, especially if you're having positive earnings. But again, if we have negative earnings, that can certainly be a catalyst for more dilution, right? Wouldn't be surprised if that happens if we have a negative earnings report, which based on where we're at does not seem likely. All right. And the next could have a macro market move downward instead of the push up. Something could happen. Maybe it's the Iran war situation or just a planned correction, an extended correction. That also could be on the table. But I'm really leaning more, obviously, bull case than bear case of this situation. All right. So, closing takeaway in the fundamental aspect, guys, is AMC is showing signs of a real operational recovery. Now the company must prove it can turn better/sustained box office results into consistent free cash flow, lower debt pressure, and less reliance on dilution. All right. So we need to see the continued momentum. It cannot be a fluke quarter kind of thing where it's like, oh no, AMC was just a one-time thing. Now they're going back to losing money. We cannot have that happen. If we get another positive earnings, this is it. It's pretty much lights out. Bear case is completely dead, in my opinion, already based on this last report. And again, if we can just keep stacking this for Q3 and Q4, it's certainly over. I mean, we're just going to continue seeing us progress up my chart, which is exactly what we're going to look at right now. Let's do that. We're about 13 minutes in. I thought this shit was going to take an hour. We might actually beat the record. All right. So bear with me. Let me pop up the... Here we go. Got the chart up. And let's dive first into the structure. So anybody who just popped in for the first time, these descending red lines here are the resistances that we had to break. We already did that from the 93-cent low. We broke the 556 and the 1188 resistance line and have been just tracking, waving up and down in a slow-like fashion, which is why I have this yellow line. It is my trajectory of the price action. Like 6 or 7 videos ago, I said, look, I'm going to map out a really slow, steady type of move just in case we're not going to get a big January, June 2021 style squeeze, guys. I said, let me just have a little option here. So I mapped out all the previous highs and lows and the volume profile levels to see potentially what this would look like stretched out. Not only that, but we have our 1390 resistance line coming down to meet our support line with an apex at, who would have guessed, January 25th, 2027. I'm telling you, you cannot make this shit up, guys. This is literally almost repeating. It really is repeating January 2021, at least where the apex point of this wedge is. So what happens when we hit the apex point? For people that don't know, the stock is either going to explode upward or it's going to explode downward. It's only one of two options at that point. When you break out of this wedge, you're going to have significant price action. And I already told you guys what would happen when we break out of this wedge if it's to the upside where we're going. And that is exactly why I have this drawn out. I won't be surprised if we got something like this, though. I'm not ruling something like this out before the apex point. Okay, so before January 2027, I'm not ruling this guy out. This could happen at any moment in time. Like I said, world events could shift things. What the Fed does with Fed policy stuff, rate cuts, whatever, it could all stack, definitely. AMC, the company itself, could announce something, a partnership. Maybe there's a merger. Maybe somebody's acquiring. Maybe somebody's investing. Guys, there's so many scenarios I could spend all day here projecting. But this guy right here, I won't be surprised either. But if it's the case where we are going here, I could see this being a scenario where on the apex, the anniversary of the meme squeeze, I could also see us reaching this point, coming down to test, and then exploding upward to that first test at 1377, right? If it doesn't go really slow like this, all right? So this right here, this line is the impulsive move, okay? That's what I'm thinking. Now, again, continuing out of the wedge, again, we see the breakout, we come down and test, then we trickle our way back up. Maybe there's another bomb earnings report where we go crazy. This thing starts pushing up, and then you're going to have this up and down kind of cycle based on the previous, like I said, levels before. So this would be the slower one. This would be the faster one if we get up here. Now, once we get up to the 1377, if we don't blast right through it, again, it'd be the same thing after we break through. It'd probably come down, test it, and then continue ripping up, because on the left over here, you can see that, again, there's the gap fill, 1930. So the article's coming out talking about AMC could go from $2 to $20. I mean, guys, you're seeing it right in front of you. That's the first target outside of this red ceiling here at 1377. When you break through this with clean volume, right, clean strength, you would go right up to it, in my opinion. And not only that, if there is for some reason a pullback at this level, you're coming back down probably to test the 1377 again from the top down. And then when that test comes back and you come off that, you're probably going to surge to the next gap fill at $43. That's what I was saying all along. And then I said also, past that, guys, past this gap fill, right? It's up to the gods at this point. You know what I'm saying? Speaking of Odyssey, it's going to be up to the stock market gods to see what happens next, because after this gap fill, it gets crazy. You're talking in the 70s, the 80s, up to $150 right up here, all these previous levels, right? But I went off the previous cliff of where the dilution all happened, the reverse split happened. I'm more concerned getting back up to this level here, all right? So that is our structure. I won't spend too much longer, guys, I promise, on the video, but this stuff is all key information. So since the 93-cent low, that's all we have been doing is slightly breaking support, coming back up, coming back down, slightly breaking support. They're trying to scare people out, and then reclaiming support, and then launching back off again. All right. So looking at our pivot points, what am I seeing? For July, this is what we had go on. Let's go back to the breakout, actually, at 93 cents. So in April, we broke out very strongly. R3 destroyed it, went right past R3. Then we had a cooling down period from the middle of April all the way to the point of the middle of May. So again, 30-day cycle pretty much, came up and then had a cooling down for 30 days, reversed here, and then started building momentum again all the way through Middle of June, 30-day cycle. This is the same thing I saw with Robinhood. This is the same thing that I saw with Carvana. It was up 30 days, down 30 days, up 30 days, down 30 days. Sometimes they got a little tricky. They would throw a 40-day cycle in on you, and then you would get blasted to pieces because you were expecting it to hit or turn around at a certain point. But nonetheless, it was around 30 days, 30 to 45-day windows. I was seeing this pattern, and the stock just kept climbing. It just kept going up and up and up and up. So that's what we're seeing with AMC right now, is these 30-day down, 30 days up. And so right now we reversed around the end of the first week of July, and we are having our push up now. So I'm expecting us to get up here. We're going to have our new pivot points come in for August. They're not on the chart yet. But again, July's target was 390. And Wedbush just put their target at $4. So you guys seeing this now? As it's starting to make sense. Wedbush is putting out targets of $4. You got the other target, I think it was at 350, was the next biggest target. Guys, look at where your pivot points are. I mean, it's like right in front of your eyes. There's no denying it. So a push up to R3 around 390 to maybe even like 420, because if we surge past it like we did here, I mean, we went well above R3. We went past that by like 40 cents. So I won't even be surprised to come up to the top of this at 408. And what is 408? Look at this big peak where the channel was formed. My channel right here from this level all the way down. So we'd come up, maybe test that, and then you get your pullback. And what I'm thinking is going to happen roughly is August into September, beginning of September is pretty bullish. Maybe it goes to mid-August where we have that big push to $4-ish. And then all of September, you're going to start to trickle down. People will be confused, like, what the fuck is going on? But guys, October earnings is coming up. Q3 earnings is in October. We know that they are not going to be ripping this thing up in September, right? They're going to use the speculation of Q3 earnings to kind of flatten things out, cool the stock off so that it can rip after earnings or on earnings. That's what I'm expecting, is that August into right at middle of August to the beginning of September, you're probably going to have that rip coming very, very soon, and then you're going to cool off. That's what I'm thinking. It just makes sense. It lines up perfectly. It gives them 30 days to just cool things down, the algos to cool down. Like I said, it just makes sense. All right. So that is what I'm looking for. $4, 430, something like that, for the next topping point before you cool down. All right. And let's see, RSI wise, it looks like it's going to be happening relatively soon because you're already approaching the overbought zone. And how long could we ride overbought for? Well, look at this back here in 4.9 to 4.20. You pretty much were in the overbought zone. So a good 10 days, 11 days, we could stay up in this overbought zone. We're not in it yet, but that would just line up perfectly, because that means you would have, 2 weeks in August where you're in the overbought kind of ripping zone. And then again, like I said, the last half of August, it makes sense for this to cool down all the way through September. And then maybe a week or so before earnings, they may drop it early again. That's the other thing. Maybe October earnings is reported at the end of September because it's so good and they want to just pump the news out there. It could be that case too. But that's what I'm looking at from an RSI standpoint. EMA wise, this also pushes my bull case, because look at what we have happening. We have the 27 EMA about to cross the 255, which is a super long band. And then you have the 50 or 48, I should say, already crossing over the 200, guys. And then the 100 is down here, still some distance away. We're talking $1.91 to 204. When that crosses over, it's just going to be more sustained momentum going upward. And I do expect that when the price pulls back, it's going to come down to one of these EMAs as the turnaround point, right? Where it's going to pivot again. So that is what I'm seeing right now with the EMA bands. They look incredibly good. I don't see any concern right now. Even on the weekly, let's just look at this. I never really look at the weekly bands, but I mean, look at this too. Is this not crazy that the 200 is also sitting right now at 1927? I might have my foot in my mouth here if this thing just shoots right up to it, right? I mean, I would be prepared for anything. But it's interesting that the 200 is sitting right at 1927, which is that first gap fill zone. So on the weekly, You can still see that the EMAs are far apart, but even look at the 100 on the weekly. I mean, this thing's sitting at $5.74, and then the 9, the 27, and the 48 are all down here, guys, clustered up, and they're pushing off each other. So even on this time frame, it looks very, very good. Looking at your MACD, still sustaining bullish bars on the histogram on the daily perspective for the MACD. No sign of this coming down just yet. And again, like I said, I won't be surprised if we have another move like this, like we had going into June. All throughout June right here, end of May into June, we get back up to this level up here before turning back around. Looking at the weekly, that's been bullish. I don't think anything's changed here. Nope. Actually, you have probably for the first time in God knows how long, holy shit, we have the signal line and MACD line pushing up above the histogram bars. So again, you cannot rule out. Every time I want to try to rule out the squeeze type move, guys, the fast move, I really can't, because when I see this, it's another signal. Looking at the monthly, we've been crossed over. That's pretty steady. Nothing crazy there. And even the quarterly, looking at the MACD on this, you could see down here that the MACD line, it's becoming more and more apparent of crossing over. Like you can definitely see it much better, the crossover here, and a smidgen of bullish histogram bar. So nothing crazy sexy yet. We're not getting a huge bar like we did back here during the 2021 squeeze, but it doesn't matter. We're flip bullish. Bear case is dead. That's my opinion. All right, so that is your MACD. Can I get this thing pulled down so that we're not all over the place? Yes. Let's look at the volume profile. I almost said volume again. That would have been a bad relapse for me. All right. Let's look at this, guys. Let's line this baby up. The most price action. And already you can see that this thing has launched down here off of all of this. Look at the volume bars down here. Comes down. It holds steady. If it was to break these two bars, you're probably coming down to somewhere down here in this area. Right? I wouldn't be surprised to go down to $1.39, but it did not do that. It reversed right off, and you had another push up. So we are already passing the volume area high right now, guys. I mean, this thing looks primed to keep pushing going into next week. I do think you're going to get your $4 price target in the next couple weeks. I mean, it just makes sense. I mean, look at this. Even when I line it up with my fixed range VP tool, this looks great. You're coming right up to the second test of the fixed range VP tool, 277. Look where the stock is, 280s. It's sitting just above this dotted line right here. One of the biggest volume bars on our fixed range tool. So if you get past this, what did I tell you guys? They're going to be like, oh shit, he's going to do it again. Yep. If you get past this bar, look at here. There's just a pocket in this zone. This looks really good. Right in here. You're going to eat up all this right in here. And that's going to push you up to 433, maybe even 460. I wouldn't even be surprised to see that. I want to see what the pivot points look like for the month of August. When those pop up on Monday, guys, and I see those price targets, if I see a pivot point up here at this level, just be ready that this could go to 460. I don't know if it would be ready to go up to the $5 level yet. I think that'd be a little bit extreme this early, especially since we only had one Q2 beat and positive earnings. I would think that Q3 would send this thing more so up to that level past this, right? You might even get to the top of the wedge at this point. Like it surges up right now, up to 460, comes back down. And then for the next Q3, maybe we come up and take the first crack at this wedge right here at, $5, something like that, right? Because at that point you'd be coming from probably 270 as a bottom for coming off the 450 move, probably $3, and then you get maybe a $2 push up to this level. Maybe it comes back down, or it breaks it right there. Maybe we break it on Q3 earnings, the wedge. I'm just telling you, I'm leaving all options on the table. So many what if scenarios, I know. But guys, that is it, man. That is all I have for you today. I think this looks incredible. The setup is there. We busted our ass staying strong through this entire progression, just getting faded constantly until now. This thing looks so good. I'm telling you guys, if I see anything different, I will keep you up to date. It's just been a busy last 3 weeks for me, so I've not really had a lot of time to be consistent with the uploads, but I'm glad I got to get this out to you guys today. Because again, we really are seeing a complete 180 of this company. So that's it. If you guys are new, make sure to subscribe. I will keep you guys updated as we go onward. Everybody, take care. Go do something fun. Relax. Nothing more to see here today. All right. I'll see you guys in the next one.